please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Getting in numbers of L&T, and I have the press release open in front of me that tells me that the gross revenue consolidated for the quarter gone by was 40,678 crore. The profit came in at around 7,370 crores, 7,370 crores, a growth of around 22%. It looks like there's going to be, okay, that is for the entire year, because if you look at the quarter gone by, the profits actually stood at 3,167 crores, a tad bit better than our expectations, though in terms of the revenue, they have missed the guidance. It looks like they have missed their guidance for the entire year, as well as lower than our expectations. If you talk about the fresh orders, they say that the company successfully won fresh orders worth 1,52,000 crores at the group level for the year as a whole, registering a 7% growth. Remember, they had guided for a flat order inflow year on year. A 7% growth means that they have beat the guidance as far as order inflows is concerned. They mentioned that the order inflows from international geographies during the year was around 35,000 odd crores, constituting 23%. That tells you that the domestic order inflows has been strong. That was the case that we had seen in Q3 as well. So looks like the company has delivered a decent set of numbers as far as the key numbers are concerned. The net profit at around 3,167 crores. The top line a tad bit lower than expectations, but it seems like that they have made for that in the order intake, because the order intake for the quarter came in at 49,557 crores. Remember, they needed a number of 40,000 crores to meet the guidance. So as far as order inflows is concerned, they have done a good job. Let's talk about the infrastructure segment, because that remains really important for the company. Now they say that the fresh orders for the year is up around 11% for that one. The order inflow for the quarter gone by is up around 27%. So that should also go down well with the street. And importantly, the infrastructure segment achieved customer revenue of 59,000 crores for the year, registering a 12% growth. So we are seeing a double-digit growth when it comes to the infrastructure segment, and that is for the entire year. So that should go down well with the street. In terms of the execution pace, they say that it peaked in the quarter gone by, with the customer revenue being 23,000 odd crores, a growth of 15%. So my guess is that this infrastructure segment performance should be taken well by the street. In terms of the order inflows, they have managed to beat our guidance. Profit has also come in better than expectations. The EBITDA also looks better than expectations at 5,300 odd crores. Remember, they had missed our revenue guidance. That suggests that they have beat our margin guidance, because that came in at 13.2%. So overall, by the looks of things, it looks like it is a good set. In fact, to break down the numbers for us, we're also joined by Prakash Devan, a market expert on the subject. Prakash, thank you so much for joining us. First up, your word on the numbers. The company seems to have done good when it comes to the order inflows as well as profit. Your word on that?
No, absolutely. So I think whatever you might see in terms of a subdued top line probably is nothing but would defer itself to the next quarter. And what's heartening is that the core business, two angles to it. One is that it's domestic in terms of growth. It's no more dependent on, the volatile foreign inflow of orders. And second is very clearly infra, which is where they make those margin. And I think I didn't hear the margin numbers, but margins would probably be good if the top line growth is led by infra as a sector. So that's something which the street is going to like, because and remember, these are trends that are far sustainable, and it's not like a one-off that you would have infra growth in this quarter and it would probably not be followed in the next quarter. So I think L&T would probably now start getting re-rated. It's probably one of those few stocks in the Nifty that hasn't participated so much in this pullback as much as some of the other larger players, larger weighted stocks have. So I think this set of numbers will probably do the trick.
Okay, so looks like it can be a re-rating trigger for the stock. That's the word coming in for Prakash. But Abhineet, come in on that. Abhineet Anand is also actually joining in. He's a lead analyst, research equities at SBI Capital Securities. Abhineet, I wanted your word as far as the infrastructure segment is concerned. Now, they have reported a growth of around 15% in the quarter gone by. The overall margins for the company in the quarter gone by were 13.2% versus our expectation of 12.5%. How do you read this number, given the fact that the international orders form just around 23% of the order book now? Do you see that as a positive?
Yeah, the numbers, especially from margin perspective, are positive. Sales is a tad lower, which I think is okay, but margins at of 13% is better than what we or street were expecting. So I would expect a positive to the numbers.
Okay, you're expecting a positive reaction to the numbers, but the company has not been able to meet its revenue guidance. Now, do you think that will be taken well by the street? And also, what kind of guidance are you expecting from the company in terms of the FY19 guidance?
So I think you see how the stock reacts depends upon what the guidance for next year is, which is basically from inflow, margins and revenue perspective. For this year, I think the numbers that they have closed is above what the street is expecting. And it depends on analyst what the management guides for next year.
Okay, so numbers as of now look better than expectations. But Prakash, as far as L&T is concerned, and this is what I've been gathering from the street, that the picture has actually moved from P&L to the balance sheet. The analysts are now factoring in the non-core asset sale and how they have been able to get the EPS accretive deals with letting go of their road assets, etc., and putting them into InvIT as well. Their ROEs have been improving. The working capital situation was a bit stretched. What is your assessment? Do you think that balance sheet is where L&T's focus is on going forward, the cash flows as well as balance sheet?
So quite possibly, because see, balance sheet repair is something that would be still work in progress. And ever since last year when we had the Ind AS accounting being adopted, you had, L&T has this unfortunate thing of having too many subsidiaries. So,
Right.
That alignment and rationalization will take maybe another 2 to 3 quarters. But whatever they're doing in terms of the balance sheet, setting the balance sheet right, will definitely also help them focus more on the profitable businesses. So this is definitely something that the street will see, even if the guidance on top line has been probably a little bit of a soft miss. But people will regard this as exactly what the management is doing, putting its money where its mouth is. And that's something which was badly required for the stock. Since the last 4 quarters, you've seen it struggling. So we had good numbers even in the September end numbers. The earnings were fairly decent, but the stock really didn't, get that kind of a trigger. But
Right.
my sense is this now seems like a trend that's kind of set in well. So yes, the balance sheet repair is a focus, and that's discernible from whatever the numbers look like.
Fair enough, bringing that point to Abhineet as well, because the stock in terms of valuation is trading at a premium to its historic average. Do you think that is what is capping the upside for the stock? And what is your rating as well as target price on the stock, Abhineet?
So stock, I don't think is trading at a significant premium to its earlier valuation.
Okay.
Because I think few years back and now L&T is quite different because of the way IT companies have expanded and finance has expanded. So one can't exactly say it that way. I would say we have to look more from core perspective, where does the infra segment grow and how much that grows, and how does the margin expand. We currently have a hold on the stock.
Okay, you currently have a hold on a stock, but do you see that changing after the management commentary perhaps later today? And what will you watch out for in terms of management commentary apart from guidance?
So I think L&T is dependent on how the overall economy of the country, behaves in the next few years. So one is how does in terms of guidance for next year.
Okay, Abhineet, thank you so much for joining us and adding that perspective. And Prakash, thank you so much for joining us in this discussion regarding L&T's Q4 performance. So it looks like the company has reported a good set of numbers, a beat on profits, a beat when it comes to the order inflows as well as margins. Looks like by the things as they stand right now that the stock will see a positive reaction today.